All right, so good evening once again, mentorship traders. 4th of March 2020, our Wednesday evenings class as always. And we will start with the views on the index, the two main index of the Nifty and the Bank Nifty. I also take this opportunity to welcome our new mentorship traders who have joined in tonight's class. Welcome to every one of you. Also, this has been quite a eventful week for the market so far and the last week. I'm quite happy to see that there's not much damage in our portfolio. It's not seen. In fact, on the contrary, I would say that few of us have done exceptionally well in this fall and made good returns. In fact, Anand has been doing consistently well every day, posting good profits. So if Anand has joined us today, I think Anand, you're doing really good. But nevertheless, let's move ahead with the views on the Nifty. So I'm using the trading view first, and we are on the weekly charts like we always do. This is our rising channel, which is now under threat. The last time the markets closed below it was in August 2019. And now we have 2 weeks successive so far. The last one is not complete yet, 2 more days to go. But the last week we had a clear-cut, confirmed, confident break below this channel low. This is not a good sign. I say this is not a good sign because this is a really old rising channel. This channel has proven itself multiple times, especially on the downside. And now it has got breached. And so far, there's no sign that the markets, there's no sign that the index is in a hurry to bounce back inside this channel. So from an intermediate to long-term perspective, we should be a little worryful. Now, generally, channel lengths are calculated to figure out how far can the market fall and all that stuff. They don't always go right, but if I, let's say, draw the info line essentially is a line which will help us draw a vertical line of 90 degrees, and it will give us information in terms of the fall. So this info line is around 1900 points. I've drawn a 90-degree vertical line. And if I drag it from here to somewhere like this, don't get scared. It's showing sub 10K levels if this fall takes the shape of a serious bear market. This is exactly what I think I was discussing the week back on what to do with the market. So if this turns out to be a bear market, then we have some serious downsides, but we will see to that later. The only sign of hope will come once this prices shift inside the channel. But as of now, the long-term charts have got damaged. Daily chart, and we've got a good cluster of supports right over here on the Nifty, from where the index is now bouncing back. How do I say it's a good cluster of supports? First is this zone where the markets had faced resistances, then support, and now it's acting as support again. That's number one. Number two, this is also the 78 and 76.4% retracement of this entire rise. This one. So it's got a cluster of supports. That's from where the index is bouncing back. Our momentum indicators, however, do not give us any clear signs of divergences. So we're not too excited about this support zone. But it seems like the index has hit decent supports. The index has managed to make some long lower shadows. Of course, strong supports have been created. and it would try to give us a bounce back. The bounce back should ideally, the best case bounce back should ideally try and test this lower border of the falling channel, which is around 11,500, but that's close to 250 points, 250 to 300 points from here. Better clarity of this rally, if it at all comes, you'll be able to see from the 75-minute chart. Now, this is the cluster of supports that I'm talking about. And the market needs to break above this falling wedge kind of a pattern that it is forming like this, needs to break out of this line and then probably come and test this falling gap and then this zone. That is to be seen. But the first scene of, or the first sign of, okay, this move may have some more meat to it, this move may have some more length to it, will come once this line is breached on the upside. Now on the 75-minute charts, if I turn it into a line chart, you would clearly see signs of divergences shaping up with the momentum indicators. So yes, from a very short-term perspective, I think the index is now preparing itself for a much needed bounce back. Let's talk in terms of levels, the current lows as the support, which is close to that 11,000, 11,050, 70, 80 mark. I'm talking about Nifty spot. And on the upside, the first is 11,430, 450. That's the recent candle high. And then the best case scenario might take us to 11,550. But from a very short-term perspective, I think there's a move up and then any sign of fall. Trend is weak, momentum is on the downside, so there's no need to be very excited about to buy stocks or the markets. I think long trades should be short-term in nature, and short trades will be slightly long-term in nature going forward. That's about the Nifty. Let's, as we always do, take a quick look on the Bank Nifty as well. Bank Nifty, if we look at the weekly charts, we find that the index has not breached the long-term channel yet, though it has tested. In terms of the fib levels that we had drawn, I don't think 38.2 is valid anymore, neither is 50, neither is 61.8. So it's essentially close to 78.6. So we can increase the width of this, and let's take out the background, and okay. So these are the kind of levels from where the markets are trying to bounce back, little close to that psychological 28,000 mark. The channel is still alive, which is a good thing for the Bank Nifty. And we would expect that this strength will, or this bounce back will hold and keep prices within the border of this channel. So the long-term charts of Bank Nifty is not as damaged as that of the Nifty, but still, nevertheless, long-term channels are getting tested. Daily chart, if you remember, we had drawn these channels and we were looking if these lows hold. Now, I'll take it off for the time being. This one has broken below the channel. Now it's going to bounce back. If it does, then it's going to first find short-term support, short-term resistances over here. I think this level, I should draw a kind of a rectangle here. This level is something to be looked into for the Bank Nifty. Highs and lows are more or less at the same level. So we're talking about 29,500 to around 29,800 levels on the short term. That's where the bounce back. This guy is also, as you can see, is bouncing back from the 78.6 Fibonacci retracement level. So both the indices bouncing back from close to supports, and kind of divergences shaping up on the short-term charts, which is the over here. We can see that some degree of divergences are shaping up, which can lead to a bit of bounce back for the Bank Nifty. So similar situation for both the indices. Nifty tests proper confluence of supports. We've got a bounce back late today's trade. The long-term picture has got a little beaten down. It's not so healthy. The short-term picture seems like we have a bounce back in our hands. If you are holding on to short trades, please protect your open profits. Do not be overexcited to short right now. Maybe we'll get a good opportunity next week. But looking at both the Bank Nifty and the Nifty, it seems like the index are in a mood to give us a bump on the upside. Don't be too excited and too hopeful to buy into this for a long period of time unless you're buying index funds or the index itself. It's better to be a little bit careful on the upside and a little bit patient if you're looking for short trades. Use the rallies to go short. Right? So that's our take on the Nifty and the Bank Nifty. Now, mentorship traders, as we always discuss, let's take up your trades, the hits and the misses that we have gone through. Of course, this week we have generally kept a very low profile because we did not want to be very aggressive or compulsive in the market. But nevertheless, as we always discuss, each and every doubt and question of ours. So please start asking your questions.